Hello and welcome to another update video about silver. So we take a look at the silver chart first of all on the 4-day time frame. My view is still, and that's unchanged. You know, these higher level time frame counts, they often don't change because they are quite fixed. You know, it takes a lot to change them. Lower level wave counts change more frequently because as new price information comes in, we have to adapt, we have to adjust, and so on. So we have to be flexible, but the longer time frames often don't change, or at least not that frequently. So my view is still that we formed a wave 1, an impulse back in 2011. We then came down in a long correction into 2020, March, and formed here a wave 2 low. And we're basically now in a wave 3 to the upside, which will be somewhere up here, okay? And the wave 3 in itself is a 5-wave move. So what we do now, we take a look at the lower time frame here. We go to the daily chart, and you can see in March, we obviously did bottom. That was here in March 2020. We then moved up in a wave 1, and we are coming down in a wave 2. Now that wave 2 could already be finished. Yeah, as I explained to you in previous videos, we have enough waves to the downside to see this correction as complete. And it is really sitting between two scenarios at the moment, and we're going to take a look at what it takes to make one of them more likely. The overall correction here in the wave 2 consists of a wave A, a wave B, and a wave C. I do see the wave C as a diagonal pattern, an ending diagonal, which consists of a wave 1, a wave 2, a wave 3. And here is now where the tricky situation comes in. So it is possible that we say we had a wave 4 already and we bottomed already here in the wave 5. It would be a very shallow wave 4, but possible. And we also completed with that the minimum requirements for this correction, because in this lower degree wave 2, which should end this bear market, we have reached the target area. So if I just take that out, take a look at the retracements, you can see that the target area is located between the $17.50 level roughly, yeah, and the 88.7% FIB level at $13.66. This is the ideal target area for such a wave 2, and we've come into it already, we touched it at least, and we bounced off it. We even broke above this descending wedge. So there's a few things that make it quite likely that the bottom could already be in, but we haven't done enough to fully confirm it. So let's actually go into the detail now. We zoom in, we go to the 4-hour chart, and then we take a look at the two possible scenarios. So as I said, in the first scenario, we did bottom already, and we're now moving up here in a 5-wave structure. The pink count is the bullish count. It's the breakout count, where we say we moved up in a wave 1, we came down in a wave 2, we moved up in a wave 3, topped here at around $24. We came down in a wave 4. That could be finished now that we've left the target area, the support area for that wave 4 that I showed you in the previous video, and we could be moving up in a wave 5 now. We only have 3 waves at the moment. So what we need to confirm with a higher, let's say with more confidence, that a bottom has been made, we want to see 5 waves. You need to see 5 waves to confirm that. And then ideally we want to see 3 waves, because after these 5, 1, 2, 3, 4, 5, we should see a 3-wave pullback, ABC. It is this pullback which is going to be the stress test for the bullish scenario. And then we can rally in the next wave to the upside. It's only really when you have the 5 waves and then 3 waves down that you can confirm with a high likelihood or with a lot of confidence that a bottom has been made. So at the moment, it looks like wave 4 was already in, yeah, and that we are moving higher. This is not very clear yet. It could still, as long as we stay below 23.51, this could still form a deeper wave 4. Actually, that is at the moment my primary expectation, just because in this wave 4 we have not yet reached the ideal target. The ideal target is $21.42. That is the 38.2% retracement. Until we either break above the 23.50 level or until we get there to that ideal target, I won't confirm that the wave 4 low is already in. So there is a little bit of uncertainty here, but important is that we haven't broken above the previous high, so we could still be in the wave 4. In the end, it's an ABC pattern, and because the wave down, so basically the A wave looks like a 3-wave structure, it could be a flat pattern, A, B, C, and in a flat pattern the wave B is quite strong. Yeah, so it's quite likely that we still come down lower. Or if we break above 23.50, then we have already done the wave 4 and we're already in the 5th wave. What would be a target for the 5th wave? We can do that as well. We can take a look at the length of the wave 1. We just add it now to the current low, yeah, obviously knowing we could come down a bit lower, but the target range for the 5th wave would then be between $24.50 and $26. Okay, so that's target for wave 5, and it's quite simple now. If we break below the support level for the wave 4 here, which is this one. So it goes down all the way to roughly $20.80. If we drop below that level, it is quite likely that we are not holding wave 4 support and we are in the bearish structure, that we come down and make one more low in the larger support area, which is located between $13.60 and $17.50. Okay, that's my update about silver. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.